Tech stocks. For years, they have been the backbone of the stock market's biggest rallies. From Apple to Microsoft, from Amazon to Google, from Nvidia to Tesla, tech companies have consistently outperformed almost every other sector. And even in 2025, after global recessions, inflation fears, rising interest rates, and constant debates about valuations, tech stocks are still booming. The question is why? Let's be honest. Many people expected the tech boom to slow down years ago. After the dot-com crash of the early 2000s, after the 2008 financial crisis, even after the pandemic bubble of 2020, investors thought tech growth would finally hit a ceiling. But time and time again, technology companies proved everyone wrong. They kept innovating, kept growing, and kept making money. And in 2025, the trend continues. So why are tech stocks still leading the market today? It comes down to three big forces: innovation, demand, and global transformation. Innovation is the lifeblood of technology. Unlike traditional industries that grow slowly, tech companies thrive by constantly reinventing themselves. Think about Apple. It started as a computer company. Then it became a smartphone giant. Now it is leading in wearables, services, and even pushing into augmented reality. Every shift opened new revenue streams, keeping growth alive. Look at Microsoft. Once famous for Windows and Office, now it is a cloud powerhouse with Azure and a leader in AI through its OpenAI partnership. Amazon transformed from an online bookstore into the world's largest e-commerce platform, then into a logistics empire, and now one of the biggest players in cloud computing. Innovation drives reinvention, and reinvention drives stock growth. Nvidia is another perfect example. Years ago, it was mainly known for making graphics cards for gaming. Today, it is the backbone of artificial intelligence computing. Its chips power artificial intelligence training, data centers, autonomous vehicles, and even advanced robotics. The result is explosive growth and stock prices that shocked even the most optimistic investors. And this is the story of tech in general. While other industries struggle to adapt, tech companies create entirely new markets. And that leads us to the second force, demand. The demand for technology in 2025 is unlike anything we've seen before. AI tools are becoming mainstream. Businesses of all sizes need cloud computing. Everyday consumers rely on smartphones, apps, and online platforms for everything from banking to healthcare. The digital economy isn't just growing, it's dominating. Think about how much of your daily life runs on tech. From the moment you wake up, you check your phone. You stream music, order food online, maybe use an app to get a ride to work. At the office, you rely on cloud tools, AI assistants, and video calls. At night, you watch Netflix, play games, or shop online. Almost every hour of your day is powered by technology. That demand translates directly into profits for tech companies and growth for their stocks. And let's not forget global transformation. Entire industries are being reshaped by technology. Healthcare is adopting AI for faster diagnoses and personalized medicine. Finance is going digital with blockchain and mobile banking. Transportation is evolving with electric vehicles and autonomous driving. Education is shifting online with digital classrooms and learning tools. Every sector, from retail to energy, is being disrupted by tech. And investors know it. That's why money keeps flowing into the tech sector. Pension funds, hedge funds, retail investors all see tech as the engine of the future. Sure, there are risks. Sure, valuations can get stretched. But when the world is transforming so quickly, it's hard to bet against the companies driving that change. Another reason tech stocks are still booming in 2025 is their ability to scale. Traditional businesses like manufacturing or real estate require massive physical investments to grow. But many tech companies can expand rapidly without nearly as much overhead. Think about software. You build it once, and you can sell it to millions of customers at almost no extra cost. That's why profit margins in tech are often far higher than in other industries. Cloud computing is another great example of scalability. Amazon, Microsoft, and Google built massive data centers. Now, every new business that signs up for cloud services adds recurring revenue with minimal extra cost. That's why these companies continue to print money quarter after quarter. And then there is AI. Artificial intelligence is not just a buzzword. It's a $1 trillion opportunity. From chatbots to self-driving cars, from personalized advertising to medical breakthroughs, AI is everywhere. Tech companies are at the center of it all. NVIDIA provides the hardware. Microsoft, Google, and Amazon provide the cloud infrastructure. Apple builds consumer devices that integrate AI seamlessly. Every link in the chain is profitable, and investors want in. But it's not just AI. Cybersecurity demand is skyrocketing as well. With more data online, companies need to protect it. Firms like Palo Alto Networks and CrowdStrike are seeing massive growth as businesses invest in protecting themselves from digital threats. The electric vehicle revolution is another driver. Tesla is leading the charge, but legacy automakers are also turning into tech companies, integrating software, batteries, and autonomous systems into their cars. EVs are as much about technology as they are about transportation. That's why investors see them as part of the tech boom. Let's also talk about global reach. Tech companies aren't limited to one country. They're global by nature. Apple sells iPhones everywhere. Amazon operates across continents. Netflix streams shows in dozens of languages. This international footprint makes tech more resilient and gives it exposure to fast-growing markets like Asia, Africa, and Latin America. Even with economic slowdowns in some regions, demand for technology keeps rising. Why? Because technology is no longer optional. It's essential. Businesses can't compete without digital tools. Consumers can't function without smartphones. Governments can't operate without data systems. Tech isn't just another sector, it's the foundation of modern life. This is why tech stocks continue to outperform. Even when the economy slows, tech companies find ways to grow. They don't just rely on consumer spending, they create entirely new categories of demand. For example, 10 years ago, hardly anyone was talking about cloud computing or AI assistants. Today, they are multi-billion-dollar markets. And 10 years from now, there will be new technologies we can't even imagine yet. Investors understand this. That's why they are willing to pay premium valuations for tech companies. Because they know growth will continue, even if there are short-term bumps along the way. Of course, it's not all sunshine. Tech stocks do face risks. Government regulation is tightening, especially in areas like data privacy, antitrust, and AI ethics. Competition is fierce, with new startups challenging big players. And valuations can sometimes get overheated, leading to corrections. But despite these risks, the long-term outlook remains strong. Why? Because the world runs on technology and that dependence is only growing. One important point to understand is that not all tech stocks are created equal. The companies that survive and thrive are the ones that innovate, adapt, and dominate new markets. Those that fail to evolve risk fading into irrelevance. That's why investors need to be selective. Big names like Apple, Microsoft, Amazon, Google, and NVIDIA continue to lead, but new players will emerge too. The next Tesla or NVIDIA could be a startup building artificial intelligence-driven robots, quantum computing systems, or blockchain-based platforms. And that's another reason tech stocks are booming. They represent not just today's profits, but tomorrow's possibilities. When investors buy into tech, they are not just betting on current earnings. They're betting on the future. And the future looks more digital, more connected, and more intelligent than ever before. So what should investors do in 2025? The key is balance. Diversify across different areas of technology, AI, cloud, cybersecurity, EVs, and consumer tech. Don't chase hype blindly, but also don't ignore the potential of emerging markets. Stay informed, watch trends closely, and remember that volatility is part of the game. But if history is any guide, the long-term trajectory of tech is clear upward. Think back to the investors who bought Amazon in the early 2000s, or those who bought Apple before the iPhone launch, or those who believed in NVIDIA before the AI boom. They saw massive returns, not because they timed the market perfectly, but because they believed in the power of technology. The same opportunity exists today. In 2025, tech stocks are still booming because the world is still transforming. New innovations are creating new industries. Demand is stronger than ever, and global reliance on technology keeps deepening. This is not just a bubble. It's a long-term shift in how the world works. That's why the smart money is staying invested in tech. Because the story is far from over. In fact, it may be just beginning. So ask yourself this. Will you be one of the investors who look back in 10 years and say, I was part of the tech boom? Or will you be one of the people who say, I missed it again? The choice is yours. And if you found this video helpful, make sure to hit the like button right now. Subscribe for more deep dives into investing, money, and financial freedom. And tell me in the comments, which tech stock do you think will dominate the future?